What is up, everybody? Gui Costin, founder, CEO of Dakota, and I wanted to talk to you about a new Rainmaker podcast, and it's going to be interviewing heads of sales, heads of distribution, asking them all sorts of questions around how they run their sales organization, really digging into their sales processes, how they've set it up, philosophically, how they've literally built the business. So you can hear, as a salesperson, our audience can hear how the best people in the business are running their sales organization. So if you have an interest in being interviewed, or if you want to recommend someone at your company to be on the show, simply email me at guy@dakotalive.com. And if you just want to register on our website where you can sign up to get alerts when we release the newest episodes, simply go to dakota.com and we'll send you emails every time we release a new interview. One of the biggest problems emerging managers have is they don't have the know-how or the expertise on how to spend their time. They believe a lot of conventional wisdom when a lot of it's not true. So my name's Gui Costin. I'm the founder, CEO of Dakota. Me and our investment sales team have created a show called the Emerging Manager Growth Show. What we do on this show is we demystify everything that a lot of conventional wisdom comes from. And the whole goal is for an emerging manager to be able to do more with less. And you have a very experienced team in myself, and I have each one of my team members on. We break down all the tips and tricks and techniques for exactly what an investment salesperson and an emerging manager should be doing to help grow their firm. Join us for another Emerging Manager Growth Show. This is one you're not going to want to miss. What is up, everybody? Gui Costin, founder, CEO of Dakota. Welcome to our latest edition of Rainmaker Live. I am joined by my long-term colleague, Tim Dolan. Tim, welcome.
Thank you.
Great to have you here. So by way of background, if this is your first time watching us, seeing us, you're not really quite sure who Dakota is or what Rainmaker is. So since 2011, we've been operating off of a sales process called the Dakota Way. And what we've done over time is we've codified it into 4 core principles, and we've turned it into a sales course. And it's really the only sales course for investment sales professionals. And we've used it for the past 15 years. We've raised over $25 billion. We use it every single day. And when we go through this, I want you to think of it as, Steve Covey had his concept of a jar, and you have to put in the rocks before you put in the sand, then you have to put in the pebbles, and then you put in the sand. So think of what we're going to go through today are core principles to be the rocks and the pebbles, and then you, over time, can put in the sand to kind of make it your own. But what we're going to go through in detail are the fundamental principles of what we believe really works in investment sales that leads to great outcomes in terms of raising capital and 10xing your time as a sales professional. So we have an 8-person sales team who goes by this. We also have another 30-person software sales team that uses the exact same sales process, and it's worked really successfully. So Tim, before we kick it off, let's talk a little bit about the Rainmaker podcast. So one thing that really hasn't existed in our world, okay, is where can you hear from some of the great distribution leaders on how they do what they do, who they are, culture, how they structure their team, the importance to them of a CRM, advice they would give to sales leaders, young salespeople, challenges they're going through. What I do is I go through and we interview these phenomenal heads of distribution, and I ask them all the same 9 questions so you can all hear exactly how they think about things. These are spectacular interviews. They run about 25 to 30 minutes. You can find them under Dakota Rainmaker Podcast, YouTube, Spotify, and Apple Podcasts. So we're going to be rolling out 1 a week. We've already done 9. They're growing. They're extremely popular and really insightful. So
yeah, what I would say is a lot of the same rocks that we're going to talk about, you see at these other firms as well, which is great to see, but also to that point, that sand, that little sprinkle that everyone else. I mean, I've learned so much from these Rainmaker podcast interviews. It's awesome.
Yeah, people are listening to them on the way to work. They're really good and they're very unique and different. And before we kick it off, so as you know, Tim and I have been colleagues since 2011, out fighting the good fight every single day, raising capital, doing meetings. Tim, before we get into the formal sort of meat of the course, could you talk a little bit about what you've been seeing from a fundraising perspective? Because I think there are a lot of myths out there about meetings and are people allocating and all of that. So let's just get into it just a little bit so the audience can kind of know what you're seeing in the market.
Absolutely. I mean, obviously, we came off of a very strong year, 2023, in the equity markets as one example, and obviously that momentum has continued. So people are taking meetings, right? We're booking meetings not only in January all the way up February and March. So keeping busy. Money is in motion, as we always talk about. Allocations are being made. So we're excited about the opportunity for our partners in 2024 and just continuing to stick to this process that we're going through on Rainmaker, right? Controlling what we can control and being in front of the right folks. So a lot of good going on.
No, it's great. And just talking to Tim offline in our weekly sales meeting, last week we won a really large allocation to one of our strategies, a long-only strategy. So I guess it's just important that the audience knows, anyone listening, is that if you stay with the program of what we're going to talk about and you do it consistently, and we know it's hard work because there are a few things that you have to do to really be successful. We're going to talk about being a professional meeting setter up, and there's certain things that you have to put into place. But we have seen absolute success over time if you have a good product, but you have to stick to it. So without any more further ado, let's just dive into it, Tim. So one thought I want to leave you with is, as we kick this off, Tim, we talk about leverage, right? There's only a few things that a salespeople can do where there's true leverage points. You just want to, before we get into, just talk about the word leverage, because that's what this is really about. Think less about sales training. Think more about us trying to help you understand where we believe you can get leverage. Even I've had senior sales professionals, just total, world-class salespeople, have said to me, "Hey, Gui, you know what? I've been doing this a long time. I listened to your show. I got a tidbit here. I got a tidbit there," because we're not here to tell you, right, what you don't know, but we're trying to point out where you might be able to get different points of leverage. Our goal is to 2x, 5x, and 10x our time of our salespeople.
Yeah, I mean, and the leverage, the way I think about it, right, is doing more with less, right? There's a lot of tools which we'll get into, whether it's a CRM, whether it's a business plan, a sales plan, activity reports, city scheduling, right? These are all just little nuggets that we put into place from a training standpoint and an execution standpoint that, again, right, raising money is very difficult, right? There's only so much we can control in the entire process. But if we could just focus our time and energy on what matters most, right, that we always talk about, hopefully over time, right, it'll lead to great positive meetings, a robust pipeline, and then ultimately an allocation.
So there's extreme structure to how we put this together because it really flows as a loop. And Tim, the first thing that we're going to talk about is, I'll outline it for you. So we have a concept that we talk about all the time at the company. We now have 62 employees, 62 teammates. The first concept for Dakota is focus on what matters most. We talk a lot about meeting, other people and stuff, and they tend to focus on things that don't matter. And since time's your only asset, right? If you're not focused on the things that matter most, you're in trouble. So the umbrella concept to our whole Rainmaker sales training is around focus on what matters most. Then there's 3 core principles we're going to go through. 1 is know who to call on. 2 is know what to say, be a master messenger. 3 is have a killer follow-up system. And then there's about 3 or 4 elements underneath each one of these concepts that come back to focus what matters most. And these are clear, actionable ways to behave on a daily basis that lead to great results. Let's just kick into it, Tim. Okay, so focus what matters most. Let's talk about the sales plan and creating alignment. We talk about it all the time. Just give a little bit of an overview of what a sales plan looks like. And I know you all know what a sales plan is, but it's a sales plan because I need to put it in a parlance that people would understand. But it achieves a different goal. But why don't we just talk about why the importance of a sales plan?
I liken this to a sales or an investment process, right? You all have an investment strategy that you're taking to the market. In your meetings, you're talking about why you buy a stock, why you sell a stock, what certain credit you're buying, or on the alternative side, why you're short something, like the investment process. We have a sales process, right? The Rainmaker way or the Dakota way of doing things, but also the sales plan outlines in detail your process, right? You're creating your TAM, right? So focusing on who actually buys what you sell, right? And then getting into what good looks like. And what you do is making sure you have this written down so then you can report back to your colleagues, your partners at your firm, exactly where you stand against your sales plan on a weekly, monthly, quarterly, annual basis.
So the sales plan, number 2, is for you and for us, the salespeople. But what the sales plan is all about is creating alignment with your boss. Because if you've ever raised or been involved in an investment firm and raising capital, the PMs and everybody think we should be raising money up here, right? And most of the time, the proper place we should be raising money is somewhere down here. So there's this gap, and that doesn't create good alignment, okay? And if you're out selling and you don't communicate to your PMs and your boss what you're doing, or if the sales leader isn't reporting up saying what they're doing, guess what? The PM's minds wander and they think the worst, that we're not doing anything. So the point of the sales plan is not, oh, geez, Guy, I know how to write a sales plan. It's not the point. You're doing it to create alignment. And what I mean by alignment is you have to write out what the plan of attack is, and then you have to sit down with your boss and share the plan of attack and agree. Here's the key thing. You have to agree on what good looks like. Because really, at the end of the day, where we believe a sales plan, what good looks like is, are we covering our accounts? Because what you have to do is you have to lay out who you're going to be calling on, and then you have to talk about, okay, we're going to come back and we're going to cover the accounts, we're going to give feedback. And once they agree to that, because it's really hard to agree to, Tim, how many times we had this question, hey, how much money are you going to raise this year? Right? That's an impossible answer to give because it's impossible, but because you really can't control that.
Yeah. It's the controllables that you need to agree on.
Controls. Focus on what you can control.
Yeah, we can control as fundraisers our outreach, the number of meetings we get, what we say in a meeting, how we follow up from a meeting, right? That's all the activity in the pipeline, the notes. That's what we can control, right? Performance on the strategy or just number of searches in an asset class, right? That's beyond our control.
So in the sales plan, and we will follow up, and I'll say this throughout this program, we will follow up with written materials that cover all of this. But the goal of the sales plan is to focus on, tell your boss who you're calling on, the channels you'll be covering and why. And then you do want to put in, if you have access to this, you have to do an asset class study so you can show what comparable funds have done over certain fundraising periods, comparing you to a similar firm. So they can't say, hey, you should be raising $1 billion this year. Well, this type of strategy, there's never raised more than $150 million in any given year, right? You have to create that alignment, and there's data and information out there that can help you do that. And then you want to agree what good looks like and success looks like. So you have to write down very specifically what you believe success looks like, and then you have to agree on your reporting cadence. Is it going to be weekly or biweekly? Monthly, you run some risk. We do it weekly with our partner clients who we raise money for, and we go through pipelines. We go through exactly what we said we were going to do. Hey, we said we would cover these 200 RAs over the course of 6 months. This is where we stand against that plan. This is the feedback. Here's the pipeline from that. And that happens every single week. If you can keep your PMs in the know, okay, transparency is everything. You won't be getting phone calls at weird times saying, hey, where's the money? How much money are you raising? Right, Tim? That's why we do this. We don't get, and who wants to get those phone calls? It's what I feared the most. So we want you, and we walk in your shoes. You got to be the dog, Tim, not the tail.
Absolutely.
Right? That's really the key. Is you have to own the relationship, and so you're not always getting caught flat-footed. So let's get into core principle number 1. Know who to call on. Okay, this is so important, Tim. Let's talk about product structure drives channel focus. Key thing. Right, product structure drives channel focus. So let's talk about mutual funds are kind of an easy one.
Yeah, mutual funds, separate accounts, ETFs for the most part. You're calling on the RIAs, the banks, the broker-dealers, obviously covering the consultants from a separate account standpoint, but really from a mutual fund standpoint.
Yeah, let's just focus on mutual funds because I want to just break down the mutual funds because it's a really good thing. Is that a lot of you out here might not be working for a large firm. If you are, mutual funds are easy to diagnose. Break down why they're so easy from a channel perspective, right? Large consumers, discretion.
The RIA is by far the largest. Banks and broker-dealers, huge adopters of mutual funds with their discretionary models from a home office standpoint, right? Because it allows their client base, large and small, to allocate to your strategy very easily.
Right. So part of your goal in know who to call on core principle number 1 in the Rainmaker and Dakota Way selling process is identify who your best fit channel is, okay? for mutual fund, RIAs, the parallel track banks and broker-dealers. There's very few banks and broker-dealers relative to roughly 2,500 RIAs in our database. So parallel track, you want to be reaching out to all of the RIAs, city by city, largest metros to start, and then on a parallel track, get your strategy in front of all the bank and broker-dealer due diligence analysts. Absolutely critical, those on a parallel track. Now, the reason I bring this up is because this would be in the sales plan, know who to call on. You want to make sure that you're spending your time in the most valuable way, right? We've done it for 17 years, taking mutual funds to the RIAs who have discretion, then simultaneously getting in front of all the banks and broker-dealers to make sure they're aware of who you are and what you do.
Yep.
Any color you want to give to that?
No, I think this is important, right? Is defining that TAM with your appropriate product structure and product fit, right? This also allows in the sales plan the PM to say, hey, why are we raising money with these endowments? It's like, well, I have a mutual fund. Right. For the most part, mutual funds are using LPs in separate accounts, right? So
endowments using
are using LPs in separate accounts. Yeah. So this is where it really focuses your efforts on your product structure for the appropriate channel.
Right. So you just have to do the work to make sure you can ferret out what your product structure is. Because listen, it's a different conversation if we're talking it's private equity fund 1 or fund 2 or fund 3 or fund 5, right? Fund 1, you have a different sales plan than you would for fund 5. So it's really important that you figure out who your best fit channels are and you stay dedicated to those. Money's green all over. Don't worry about the brand names. Worry about you're focusing your time and energy on calling accounts that can allocate to your strategy. So that's number one, right? Within know who to call on is establishing your TAM, the channels you're going to focus on. Second, let's talk about the process. So this is really critical. Tim, you want to talk about, so we believe, right, every salesperson, when they come in the office, each day needs to have extreme focus and not a lot of thinking, just focus and talk about city scheduling. We do it through city scheduling.
Yeah, so city scheduling from an elementary standpoint is taking down a massive list of accounts. So if I'm selling a mutual fund to RAs and banks and BDs, that's about 2,700 accounts. For one person, that's a lot, right? But if you truncate down those buyers into metro areas, or how we define city scheduling, Chicago has 85 accounts. That's highly manageable that you can cover in a day or two. So very simply put is we grab a city 4 to 6 weeks out and we start scheduling for 9, 11, 1, 3, and 4:30, those defined time slots, and we start reaching out to those accounts. And at any given point in time, myself and our team, we have 5 cities on the schedule. So we're always looking 4 to 6 weeks out, scheduling for those cities. And what that does is it's a force mechanism to cover accounts across the channels that are best fit.
So a good friend of mine has a son at BC, went up to have dinner with him. And since he was going up there, he booked a bunch of meetings using Dakota Marketplace, our database. He got a bunch of great meetings. He did one of the meetings and he's explaining to me how he walked into a $500 million RIA and he's kind of a natural resources strategy. Lo and behold, they invest directly in natural resources. Love it. It's a great fit. I looked at him and I said, oh my gosh, you're not going to believe, but we've literally built our entire business based upon that exact activity. I'm going to be in your city. Can you meet at 9 o'clock?
Yeah.
And so what we do in order to force that, we force our team to always have 5 cities on the calendar at any given time that you're scheduling for. That means 25 meeting slots.
Yeah, I think importantly, because I do get asked, I'm sure you do too, as well as like, well, we're not really traveling or we don't have the budget to get on the road. We're not saying that you actually have to go do these meetings, right? If you get a full day, we would highly recommend go doing it because there is that in-person effect, which is huge. Just flip it to a Zoom, right? And just say, hey, my travel plans have changed. Can we keep our 11 a.m. meeting and just flip it to a Zoom call, right? It's less of the actual doing of the meeting, which we'll get into when you're in the meeting, but it's forcing you to cover these accounts on a regular basis.
Yeah, and if budget's a mitigating factor, own your backyard, own within 50-mile radius of your office, 100-mile radius, right? You can drive to those cities. So that's why we build our database around metro areas is there's more than enough accounts in the top 15 metro areas, which is where most asset managers live and work and are headquartered. So own your backyard. If you're based in LA, do LA, San Diego, San Francisco, very, very close proximity. You don't have to fly to Boston. Now, we'd strongly recommend over time is, take a flight and do it right over time. You want to cover Boston, New York, and Philly over time, but own your backyard. So importantly, we believe in city scheduling. That's our sales process. Let's talk about how to get the meetings, Tim. Email is how you're going to do it. Love to follow up with a phone call, but it's how you structure the email that is most important. It's a very clean structure that we've set up. You want to address it?
Yeah, I mean, first and foremost, it's a very tight subject line of why you're reaching out.
Yeah,
right?
meeting request.
Meeting request. So our partner, take Edgewood Management. Edgewood Management, meeting request 1/27, January 27th, right? So now the analyst
3 p.m.
knows we're reaching out for a meeting on the 27th.
At 3 o'clock.
Correct. And then you get into the meeting or get into the body of the email, and it's very short, 1 to 2 sentences max, and a definitive call to action. Can you meet at 3 p.m. on January 27th? There's so many times that we get some emails sent to us. It's like, let me know if you're free that week, or I would love to hop on a call, right? If I got that email, win, right? So you need to have that definitive call to action. Can you meet, or can you hop on a Zoom at 3 p.m. on the 27th?
Yeah. So the email is critical. We always review emails for our customers. So send us the emails. We'll review them. Subject line, meeting request, date and time. Body of the email, 1 to 2 sentences max, making it extremely compelling. So they have all the information of why they should take a meeting with you, right? It takes some art to write that. And then the final sentence is a clear call to action. Can you meet January 27th at 3 p.m.? ? Those are the key elements. You need to define your TAM so you're focused on the right investors. You need to have a sales process, which is city scheduling. So you always are scheduling for 25 meeting slots at any given time, 5 cities. And then you need to have a very solid email that will get those meetings. So moving on. So core principle number 2, we spend all this time and energy getting the meetings, right, Tim? Tons of time and energy getting these meetings. I always talk about Cincinnati. It's just a story that I just love because you get there and we're generalists. You now have 5 meetings in Cincinnati. You're meeting with Ted Finley at Fifth Third. You're meeting with Fund Evaluation Group. You're meeting with a corner office UBS person. You're meeting with Jim Gore from Thor, if you will. And you're doing all these meetings. So I can't tell you how many times I've talked to friends who are due diligence analysts, and they say, geez, I said, do you ever walk out of a meeting and not have a clue what a firm does? And they said, absolutely. So Tim, let's talk about becoming a master messenger, just how important that is and how much practice and planning it takes.
Yeah, absolutely. Right. And to your point, you spend all this time and energy, you pay to get on the flight, hotel, rental car, to then get into the meeting, right? You need to make sure, right? Because we're playing a little game of telephone here, right? The analyst is taking what you say over a 30 to 45 minute long meeting, and they need to repeat it to their investment committee, their colleagues, their clients, whoever it might be, right? So we got to hit on the key points.
And you're never selling to the end buyer. So the art of investment sales is taking a complex story, making it simple. It's just that simple. Complex story, making it simple and easy to understand. And it takes a lot of practice. So let's talk about the first 2 minutes of any meeting. Now, as I opened with, think of, we're talking about a jar here, okay? We're putting in the big rocks for you, and we're putting the pebbles. You can put in the sand because everyone's going to have their own nuance for how they're going to open a meeting and how they're going to do certain things. But I'm going to tell you, there are some core things that are game changers that you have to cover. And let's talk about the first 2 minutes in your opening remarks.
Yeah, this is all about centering the conversation, right? Especially when you have a portfolio manager sitting next to you, and you know how they can get is just they're so excited about a stock that they just bought or something they read in the news, and they can go down pretty deep into these tangents. We, as the fundraiser, need to make sure that analyst and allocator knows exactly the key points on the firm. So there's about 15 to 20 key points that we can cover in the first minute and a half to 2 minutes. Firm founding, number of employees, location, assets under management, number of investment professionals, strategies that you manage, right? Track record, how long you've been around. So these are all the key points that maybe take max 2 minutes. And then you say, today we are here to focus on our large cap growth strategy. Boom.
All right. So if somebody hears that the firm was founded in 1994, the team's been together since 2006. It created this 15-year track record that you have $35 billion in AUM. You have 6 portfolio managers and 7 analysts. You've all been together for a long period of time. It's a 20-plus year track record. It's, for us, in our case, 22 stocks, concentrated, of course, one in, one out. You go through all of those, available in a separate account, mutual fund available on every single platform. Now the people know, it's like, okay, now I know what I'm dealing with. And then part 2 of this, so practice your opening remarks, because you don't want to waste a lot of time having the person across the table asking fundamental questions that you could have answered up front, so then they could advance the conversation to what I think is the most important thing, which is getting into a conversation.
Exactly.
I just want to talk about that because, as we all know, if you've been with a PM, right, and if you don't coach them well, they could just go on for a monologue for
Absolutely.
half an hour, 45 minutes.
Yeah, and just also getting an understanding, right? Asking them questions. How do they invest? How do they view this asset class? What have they typically done in the past in large cap growth? So you have a sense of, is concentration new for them, right? Have they been passive or active, right? So all those types of things can help drive the conversation to where, right, really brings the strategy to life. Whether it's you're covering the philosophy, which should be fairly quick, and then getting into the process, right? Like why you bought and sold a certain security. So that is what brings it to life.
Big time shortcut here. If you're calling on an RA, absolutely key that you go to their website, download their most current newsletter to download their current thinking and read it, and then reference it in the meetings. So conversation critical, back and forth. Now, the meeting closes. Tim, we talked about the 2 most important questions. Okay. He and I it's the same philosophy. It's just we might have a little nuance on how we do it, but
it's the sand.
It's the sand. This is where the sand comes in. A lot of people ask me, follow-up, Gui, how do you follow up after a meeting? I say, you don't follow up after a meeting. You follow up in the meeting. And I understand you might send a thank you email and all that. I'm not saying that. You got to do your follow-up in the meeting. 99% of salespeople do not do this. I strongly recommend that you do it. This is how you create extreme efficiency. So let's just do long only. You had a nice meeting, talk about your small cap value strategy, large cap growth, international growth, whatever it might be. You close out the meeting, you simply look at the person and you say, hey, I really enjoyed today. Could I just ask you 2 quick questions? Sure, what's that? Do you see our strategy fitting in your asset allocation model? If they say yes, okay, now you can go on to the next question. If they say no, you know what the follow-up is. It's not a fit, right? And a lot of times, it's not as simple as small value, mid value, large growth. It could be a little more of an esoteric private fund strategy. If they say no, they're on the mailing list. You know what that's. You know exactly where you stand. If they say yes, then you say great. Long only, do you think you're going to be doing a search in our asset class in the next 12 months? If they say no, you know what the follow-up is. Onto the mailing list and just follow up. You have those as your notes. If they say yes, then you can start to ask, okay, what would be the most helpful to advance the discussion from a due diligence perspective? If you're not with a PM, do you want to set up a call with a PM? Do you need to do an on-site? Do you need to fill out an RFP? Whatever it might be. Asking those questions are critical. Now, if you have a private fund strategy, simply say, hey, that's great. You see, you guys would allocate to our type of strategy. We have a close 6/30/2024. Do you think you can make our final close on 6/30/2024? If they say yes, then you know what the follow-up is. You start asking questions about what the next steps would be in the due diligence process. If they say no, we can't make it, then you know what the follow-up is. So what all this comes from, the place that this comes from, is the team would come back 15 years ago. How were the meetings? Great meeting. I'm like, okay, did they wire, 10 million in the meeting? Is that why it was so great? Or, what's the current status? What's the next step? That's all I care about. And I can take no. So we banned the term great meeting. You can't say great meeting at Dakota, because really what you want to know is, did you ask those 2 tough questions to close out the meeting to save yourself, weeks and weeks and months of time?
Exactly.
Right? So being a master messenger involves practicing like crazy on how you present, mastering the beginning of the first 2 minutes, answering those 15 to 20 questions. Secondly, getting into a conversation. And 3, making sure you ask the 2 tough questions to get a sense of exactly where you stand. For all of you, you're going to sprinkle in some sand into the bucket and do your personal thing. So like we're saying, we're giving you a lot of flexibility. Those are the 3 core areas where we believe you have to bring the story to life. So the third core principle is where you can go from 1x to 10x. This is another key leverage point. Everything we've gone through up until right now are all leverage points. Having a killer follow-up system involves using a CRM. Do you want to talk, Tim, about some of the most important aspects of how you utilize a CRM for maximum productivity?
Absolutely. So first and foremost, your city scheduling, you're reaching out, you're sending your emails. If you have the ability to track your activity, your calls and emails in your CRM, great. But most importantly is tracking your activity, what meetings and calls you've completed, right? So that way, when you've gone to Chicago, you did the meeting, you did the follow-up, then a month to 3 months later, you can look at past activity reports. A CRM and everything we're talking about is all to create sales triggers and reminders, right? So we all have a lot going on at any given day, and time does fly, right? I was just in Chicago, but it was really 9 months ago, but it felt like a month ago, right? So the CRM running past activity reports, so making sure you're getting all your conference calls and meetings, face-to-face meetings in your CRM so you can run past activity reports.
And we'll get into some detail on this, but the critical component of this is knowing who to call on. Back to principle number one, you're going to gin up a lot of activity because you're going to be sending 20 to 25 emails a day, booking meetings. That information has to get into a CRM to make it very efficient to then see where you've been so you can create past activity reports so you can follow up easily and know where you've been. And you do that, and that creates sales triggers, right? And that takes 2 clicks of a button.
Yeah.
That's the killer thing. If you're relying on Excel or a yellow pad of paper or sticky notes or anything like that, it's too much information for the brain to literally get it set around. So you want to be entering those meetings that you've scheduled, creating 30-day, 60-day, and 90-day past activity reports that you look at on a daily basis to trigger follow-up sales actions. The next thing that you get out of a CRM, which is critical, is back to the sales plan. You need to create pipeline reports. A CRM makes it very easy to create pipeline reports in the opportunity module. 2 things that you have to have, we believe, at the opportunity, the 2 blanks, right? You want to talk about the 2 text box?
Current status and next steps.
Right. It's very important you create those custom fields because the knowables are very easy. Name of the account, opportunity name, the contact, email, phone, the opportunity type, the product, the AUM of the firm. You can get all that, right? The type of account that it is. But the true triggers that really advance you forward are you typing in what your current status is of that account and what your next step is. Once you have that, you format it nicely. You can export it to Excel, and that's what you share with your boss in your weekly meetings. Yeah. I can't tell you how easy it is to do, and then you live in that opportunity pipeline report on your screen because it's forcing you because you have it organized by sales cycle. And if you have it organized by sales cycle, your brain just goes, okay, I want to move these from the bottom to the top, right? And so you have your 7 sales cycles. How we do it, it's all in our follow-up materials. You're moving from the bottom to the top, right? Tim, you live in your pipeline reports on a daily basis.
Absolutely. And again, back to the point of time flies, felt like I just met with an opportunity, but again, it was 3-6 months down the road. It's like, wow, those notes are actually, I need to follow up, right? This is all about sales triggers, not only for myself with the activity reports and the pipeline reports, but again, to Gui's point at the top of the call, this all comes full circle and goes back to the sales plan. These are the exact reports that you're going to be printing out and sending to your team, your partners, your portfolio managers against the sales plan, right? So here's what I listed out. Here was our TAM. Here's the activity we've done against the TAM. And here's the output of all of this activity. That's the pipeline report. And again, let the market speak for some instances, right? If you don't have the right product structure, or fees are too high, or performance is where it is, or track record is too short, right? That's where you can put it in the notes and you can share with your team, all right, here's why certain things have happened, or here's why we can't close this account, right? All of that in the notes and next steps allows you to report back to your team.
This all comes back to the common theme of focus on what matters most. 2 things. Everything we've said is you don't, from an administrative perspective, what you don't want to be doing as a salesperson is wasting time looking for who you've met with before, where those notes are, and making it just wasting time looking for information. No different than the reason we created Dakota Marketplace in our database. We personally didn't want to be spending time doing administrative work on websites and the salespeople wasting time looking for people to call on. The more you can eliminate looking for, if you will, whether it's people to call on or who you've met with, those two concepts. But you can find most salespeople spend a ton of time doing that. They're trying to find new leads by going to websites, going to form ADVs, going to all these different places, government websites. Well, we solved that problem with Dakota Marketplace. If you effectively use a CRM, then you'll eliminate the need to be looking for everything that you've done in the past. It'll all be right there. It can be done so easily, and it's a complete game changer. So that wraps creating a killer follow-up system. Like I said, it'll all be in the material. So Tim, just as we conclude, I just want to do a little summary because it does come back to this umbrella concept of focusing on what matters most. So it's creating a sales plan to create alignment with PMs. It's knowing who to call on, creating your TAM, and executing via city scheduling with a killer email. It's then when you get in that meeting, knowing what to say, being a master messenger, where you have your opening remarks, you get into a conversation, you ask the two tough questions. Then lastly, as we just went through, just how important it is to get leverage into your business around using a CRM to log meetings you've scheduled so you can create past activity reports to trigger sales actions and then be able to easily create pipeline reports. So, Tim, any closing remarks?
No, that was great. Thank you.
Cool. All right. Well, thanks everyone for joining. Like I said, we'll have all the materials sent to you right after this call. And please go check out the Rainmaker podcast. These are world-class insights from world-class distribution leaders. Have a great day. Hello, everyone. Thank you for joining Rainmaker Live. Hopefully you enjoyed the content. As you know, we have a whole program that's dedicated to training both salespeople and sales leaders, okay? How to lead teams and how to follow the principles that we have followed to raise over $25 billion. If you have an interest in bringing me in to meet with your team and go through the Rainmaker curriculum, I would love to do it. Simply email me at gui@dakota.com.